Hi, this is Amy with the Bulletin Board Heroes weekend edition. It is Sunday, the 9th of January here at Vox Markets. Starting off with 7 Digital, where we've broken that line of resistance from back in October, and the 50-day moving average around 0.5 pence above that, hoping for at least the old August-September support around 0.7, and best case scenario up to that July resistance line projection through to 1 pence plus. I suppose there's also the chance of just clipping that falling 200-day moving average at 0.87 if things get off the ground properly. So a bit of charting regarding the next stock here, Angle, where somebody was trying to guess exactly where the shares would rebound. I think I'm probably going to go for the more optimistic analysis here. Rising trend channel there from this time last year. We've got the 200-day moving average just in the mix at the moment as well. That's the the dark grey line there around £1.17, and I think we may have already hit the low there. Just bounced also off that old October support at 115, so does sort of add up as being a potential rebound situation. Certainly well below 115 cancels out the idea of another move back up to £1.40. If you're cautious of the shares, maybe you'd wait for an end-of-day close through the 50-day moving average at 127 before assuming that the shares are finally out of the woods. But if that's the floor of the channel, then it's looking actually quite good for Angle at the moment, especially given the way that we had that island reversal last spring, so the gap down in March and the gap higher in April, and that gap remains unfilled. So it does actually suggest that we're still in a pretty strong bullish configuration there at Angle. On to Cobra, which I haven't looked at for quite a while. You can see why from the daily chart, basically down all the way down from February last year. But it looks as though we've bounced off very oversold areas here for the shares. So around the 20 RSI, had a sort of a dead period there as well, flatlining. So that also tends to be the bottom of, or the low for a stock or a market. And then the vertical move higher. So a bit of a bear trap rebound from below the old October support at 1.44 pence. Above that, looking for 2.2 at the top of a broadening July triangle for the stock. So rather more encouraging there at Cobra at the moment. Onto a stock where somebody was complaining, well, a couple of complaints. One is that calling the shares higher from higher levels, which obviously can happen, and the other one complaining then that the target of 30 pence on sort of the countdown for 2022 was rather lame. Well, I suppose both complaints can be correct if the shares don't actually rebound from here, but it looks reasonably sort of solid now after the, I suppose, the extended declines that we've had from August. The key here, I think, is actually getting back above the old December 2020 low there. That was around the 20 pence, well, what are we looking at? The 17 pence level, rather. And above that, which we managed to achieve this week with a sort of a narrow bear trap rebound, then the shares could finally be on their way. Still like the 30 pence area is a sort of modest target. That's also meeting with the falling 200-day moving average. Obviously, the real hope here is that we've just basically bounced off last year's support at 16, 17 pence, and we will then head up towards the other side of the range for 2022. I think that would not be too much to ask after all the water under the bridge that we've had since the summer. Another stock which is moving along to another stock which maybe has got some people scratching their heads in terms of the share price, probably looking for it to be well over a penny, but still actually under a penny. Nice rebound here towards the end of last week with a double bounce above the rising 200-day moving average, so that should mean the shares are on their way. All we need now really is a break of the 1 pence level again in the 50-day moving average to open up the prospect of a 1.6 pence target, which is a February 2021 resistance line projection. That could be hit as soon as the end of next month if we break through the penny level over the next week or so. On to Oriole, rather. I was going to say Orosol, but Oriole. Here we've got a situation where it is an improving, the start of an improving trend. Broken that line of resistance there from back in June around, 0.32, 0.31. And while we're above that, looking for the 200-day moving average at 0.55, hopefully, over the next month or so. Long line of support there, which we finally bounced off there from back at this time last year, and also a long RSI support line as well. So it looks as though finally, after nearly a year of taking up the slack, Oriole shares could be on their way up to a reasonable rally, maybe 0.5, 0.6, something like that, over the next 4 to 6 weeks. Stock, which is looks like it's also hit rock bottom and is ready to rebound, is Osirium. Here we've got a situation where the shares fell back from the September 25 pence area down to 15 pence or 14.5 pence to start this year. Very, very oversold as well. So down at the sub 10 RSI levels, which I think is probably amongst the lowest that the shares have ever been. And the view now is that we can hold the 14 pence area, then we could at least see the shares back up towards former resistance on the way down in the 20 pence area. But the idea here really is that the shares have finally sort of got rid of the last of the sellers, breaking that September resistance line projection. So let's see how we go with that particular theory. Stock which has apparently fantastic fundamentals, which were described to me before Christmas by a canny investor, is Pipehawk. Unfortunately, I've forgotten what the fundamentals were, but the chart actually looks fantastic, and I've charted it before. Here we've got this final line of resistance there from the beginning of last year. That's around, let's say, 20 pence. End of day close above 20 pence anytime soon, and the shares could be up to 35 pence, which is that July resistance line projection, maybe as soon as the end of next month. So looking very strong indeed for Pipehawk, especially with the 50 and 200-day moving averages both rising, and especially while we're above the 50-day line at 15 pence. Looking very solid indeed. I hope that somebody looks up the fundamentals there as well. On to SDX Energy, and here we've had, I think we looked at this before, but here we've had a gap close, bear trap gap close that we had last month. We've had a gap through the 50-day moving average, which is also another plus point. And especially while we're above the 50-day line and the 9.5 pence area, looking for a fill of that gap down from August up to 14 pence over the next month or so, or perhaps even sooner. But looks as though SDX finally turning around there. Stock which is gets the odd mention here, but it's back again for the new year. Tuple, it has its fans here. Tuple breaking its July resistance line there around 0.04, and above that looking for, I suppose, a retest of the main 0.08 resistance, which has been in place since the spring, and maybe we could see that by the end of next month. That's it for me today. More updates during the week.